As a potential home buyer, one of the things you may be concerned with are interest rates. Everybody's talking about it. Maybe you feel as if you don't want a high payment, so you're going to wait the market out, see if it goes down. Another thing you may be concerned about is buying a house at the top of the market, which you perceive to be a bubble, right? You don't want to buy a house at $300,000 and then next thing you know, next year it's worth $260,000. Right? So you don't want to end up in that situation. If you are renting right now, I just wanted to put a couple things in perspective that may help you make a more well-informed decision. Let go. Renting versus buying. Right? So in Virginia, the average rental rates increase at around 14% each year. All right, so plus 14%. Now, if you're going to buy a home, your average interest rate on a mortgage is going to be around 7.5%, right? On a mortgage. Now, let's break this down into payments, right? Now, I'm going to use Virginia Beach as an example. For a 3-bedroom, 2-bath home, you're looking at around $1,900 on the low end per month to around $3,500 on the high end per month. And this is going to vary because if you want to get closer to the beach, if you want a skyrise, if you want more amenities, right, you're going to be on the higher end. If you want the bare minimum, and I do mean bare minimum, you're going to be around $1,900 per month for a 3-bedroom, so 3 beds, 2 baths, right? Let's look at homes. Now let's compare apples to apples. In the same area, you're looking at a payment of around $1,250 per month to around $2,500 per month. People look at that interest rate and they're like, oh, that's a high interest rate. But one of the things you may not have thought about is that if the interest rates come down, you could just refinance your loan. Now you're locked in, right? The difference between these two numbers right here, see? So you got $1,900 here and you got $1,200 here, right? But the difference is this is locked in. So this is locked in. And if you refinance, you can even have that go down some. So you got options. Locked in, you can refinance and get a lower monthly payment, right? Whereas on the rental end, right, every single year, this is going to increase by 14%. So what's 1,900 times 14%? Get my calculator out. You're looking at 2166. So year one, this is year one. But year two, you're at 2166. Now, if you had bought this home, you would be still at 1250. So you're seeing a real live example of the detriments of renting in today's market. The rental rates are going through the roof. I've seen rental rates go up as much as 40%, right? That's not going to happen with a mortgage unless you're looking at an adjustable rate mortgage, right? You don't know what's going to happen. But if you get a fixed mortgage, you can lock in your monthly rate. How would that help you as far as your finances go? How would that help you as far as budgeting goes? You don't have to move every year to try to find a new home. Let's say this one, instead of 14%, let's say it went up 40%. Now you have to find a new apartment, or now you have to redo all of your finances and all your budgets to afford a higher payment, right? You're not getting more amenities. You're not getting more protection, a bigger pool. You're not getting any of that, but you're getting a higher payment. just because you're renting. I hope this helps you in being more informed about buying versus renting so that you can make a more well-informed decision for your family. If you need help buying a home, be sure to call me. My number and my email is in the description below. Also, I'm going to put my website so that if you want to do some searching on your own and set up some alerts, you can do that as well.